Welcome everyone to the CFO Swinger Watch newsletter's technical analysis video for the week of June 24th through 28th. Now, before I begin, make sure you guys are always reading the newsletter first before you watch this TA video. Remember, I have way more details on what our actual swing trade ideas entail for this week. For example, I provide the exact option contracts that we need to be looking to execute on for each swing trade idea and the exact 3-point game plan for each swing trade idea using equity. And that's just a small snippet of what the weekly report says. So make sure you guys are not only watching the technical analysis videos. So with that, let's take a look at the markets. So the S&P 500 has printed a very nice and tiny indecisive candlestick that is a doji candlestick. Now, why is it a indecision candlestick? Because the bulls and the bears have fought on Friday of last week and ended up not winning, right? No sides have won the battle. And the main thing that concerns me about this doji candlestick is that so far, currently, our trend is to the upside. And so when we have a doji candlestick to the upside, that usually indicates that the group that is controlling the trend, which is going to be the buyers, the bullish group or bullish side, is losing momentum. And whenever I do see a doji candlestick, that also means that this lost momentum will be taken up by the other side, which is the bears, right? The sellers. And this type of doji candlestick during an uptrend is usually kind of a yellow flag, not even a red flag, but a yellow flag, because it can still mean that bulls can take back control, especially since last Friday's indecision candlestick here ended up closing above my daily 10, my red line here, and my daily 21 SMA, my light blue line. So again, we're still in a very good uptrend. However, this single daily doji candlestick from last Friday is showing some concerning signs. Again, a yellow flag. Now, if we do decide to retest the daily 10 SMA either tomorrow or earlier this week, there is a chance that we can come back down to retest 540, which has been a huge daily support level, a very recent daily support level, and it might even break below 540 to try to at least fill in this gap up that we saw between June 11th and June 12th. And so, that obviously means that we need to break below the daily 10 SMA and stay below the daily 10 SMA to be able to break below 540. And at that point, we'll be getting some red flags that this current uptrend does not have the legs anymore and any longer to continue to move to the upside. All right, so that is the one single thing that we need to be watching out for, along with this very, very important daily 540 level. Right? Now let's take a look at IWM. So, as you guys know, we have been in this ETF, the small cap ETF, for quite some time now. And last Friday, we ended up with a very fortuitous hammer candlestick on the daily time frame. And this hammer candlestick couldn't have been printed at a better area, because so far, as I've repeatedly told you guys in the past, the price has been holding this 198, okay, right around here, 198 to 200 demand area. And so far, we have been following this specific demand area to a T. And the price continues to be magnetized towards this whole number psychological level of $200. And last Friday, we ended up making a very nice looking hammer candlestick while closing over this psychological whole number level of $200. Now, the only thing that I do not like about this current move from IWM is that we're below all of my major SMAs that we can currently see. So the daily 10, the daily 21 SMA, and the daily 50 SMA. And we have yet to see the daily 200 SMA catching up to the price, so we won't be looking at this on the daily time frame. But again, the only thing that concerns me is that the price is staying below all three of my major SMAs, and that means it's going to be a pretty tough hurdle to pass all of these three SMAs and attempt to get back to an uptrend. Now, the only thing that I'm looking at so far again is the chart pattern, right? We have a very nice looking cup and handle, and a cup and handle is inherently a bullish chart pattern. And so as long as we continue to move back at least to retest this descending resistance trend line that makes up that descending handle of the broader cup and handle chart pattern, then we can continue to expect a potential breakout from this cup and handle bullish chart pattern. So in my head here, this is kind of what I see. Since we have retested the quote-unquote lower ranges of this handle and the lower ranges of this demand area from 198 to 200, there is a chance that we can continue tomorrow to at least go up, retest the psychological whole number level of $200 as a new level of support, and then continue to rise up and up until we're able to break out of this descending resistance trendline or the overall descending handle, and then eventually retest the 210 major resistance level or the actual neckline resistance of this overall cup and handle. Okay, so we're going to take this step by step because again, I've told you guys repeatedly what my upside targets were for IWM if we decide to see, or if the markets decide to give us a huge run of small caps in the last half of this fiscal year. And so just to remind you guys, okay, we have the targets of 216, 226.50, and eventually $233. Okay, so 233, 226.50, and 216. Alright, so with that, let's take a look at our first swing trade idea for this week. So, we have Tesla yet again. Now, the reason why we have Tesla again is that, well, last week, it couldn't have made a better price action candlesticks. Okay, so if you take a look closely here, on Monday, if you guys remember, we caught this one right at 181. So last week, our entry point was over 180. But again, we wanted to see that official confirmation that the price wanted to continue to move up higher after it broke out from 180. And so that 181 was quite literally a perfect entry as we continue to see a rush of buyers and bullish investors and traders continuously piling in to this name last Monday. However, after Monday, and obviously since last week was a very short week, we saw a nice drop in volume, which also provided an area for the price to basically digest the entire Monday's days worth of a price action to the upside. And we got a very nice low volume pullback from Tuesday and Thursday. Now, this low volume pullback is really exciting to see because whenever we do see a breakout from a major level of resistance like 180, we tend to see a very low volume pullback that leads back to that initial breakout level here at 180, and we retest it and we turn it into a new level of support. So from a textbook perspective, a previous resistance has turned into a new level support. So it's a nice RS flip. And that always happens during a typical uptrend. And we know that Tesla is now in an uptrend because the daily 10 and daily 21 SMAs are staying below the candlesticks. And the candlesticks themselves, or the price action themselves, are staying above my daily 10 and daily 21 SMAs. And in fact, the daily 10 has just experienced a nice bullish crossover as it has moved over the daily 21 SMA on Monday of last week. And so Friday, right now, I want to talk about last Friday's candlestick. We have a very nice inside day candlestick where the entire Friday's range of the highs and the lows are within last Thursday's highs and lows, or the entire Thursday's range. And so with such a tight inside day, that usually indicates that we want to see a continuation of the current trend. And what is the current trend, guys? An uptrend. And so what I want to see is a clear break from this kind of tight consolidation that we saw, and a very nice low volume and tight consolidation that we saw most of last week, and continue to move to the upside and eventually hit that $200 psychological level that I've been touting for the past couple of weeks for Tesla. Now, for the entries here, I personally want to keep it very simple, and I want to take a look at this 187.50 as the official breakout entry for anyone who has not made an entry yet on Tesla for this week. If we do, again, see a nice move back up higher until we retest this major daily resistance level at 187.50. And so we just want to see a very nice entry point at 187.50 as the price continues to move on up higher. And so this will be our official confirmed breakout entry for anyone who has yet to start a position on Tesla. Now, there is a small, well, I wouldn't say small, but a very nice descending resistance trend line that has been forming on the daily time frame. If we compile the previous 6 trading days worth of price action, and we have what we have here is a descending resistance trend line. If you go on the 2-hour time frame, okay, so it really looks like a very nice bull flag, right, or at least a nice wedge. Okay, so there it is, there it is, and this wedge can give us a potential breakout to the upside and to the downside, since this chart pattern is a neutral chart pattern. It's not bullish or bearish exclusively, and Tesla can still break to the downside. But again, based on the higher time frame analysis on the daily time frame, everything looks to be pointing to the upside. And so on the intraday time frame, if we were to get an entry point as we break over this intraday wedge chart pattern, I would want to see a break over 185.20, or at least we're looking for an entry point over the whole number level of 185, and that will be right here. Okay, so be right there. There it is. Okay. And this was also the previous level of resistance where we saw the price being contested by a bunch of sellers, and eventually we saw the sellers win, and that was right around here. Okay, and so 185 can become a pretty tough area to get past, especially if we're waiting to see the bulls trying to get out of this wedge chart pattern, and on the daily time frame to be able to come back and retest this magnet resistance level on the daily time frame, the 187.50 level. Okay, so you guys have your levels to play with there, and of course make sure you guys go back to the report to read the full analysis on Tesla, along with the full 3-point game plan for our current equity position on Tesla. All right, And last but not least, let's take a look at our second swing trade idea for this week. And I have completely botched that ticker. So our second ticker and the last swing trade idea for this week is SWKS. I'm also botching it while I'm saying it, and I've completely botched it here as well. So SWKS, right? So if you guys remember, this was the previous swing trade idea from I believe it was back in late February or early March. Okay, but that's not the main point. But if you go on the weekly time frame, okay, SWKS is a huge laggard. Okay, it's a huge laggard as a semiconductor name. And in fact, based on the current price action, SWKS has been lagging officially for 2 straight years. Just two years of straight consolidation. And so what we have here that I'm showing you guys on the weekly time frame is a huge macro base, a multi-year, specifically a 2-year base, where the price has made no progress either to the upside or to the downside. So the price has just been stuck sideways for 2 years. And that's quite a long time. And during the 2 years here, we have made a huge macro wedge chart pattern. And just like I've mentioned on Tesla's wedge chart pattern on the intraday time frame, on the 2-hour time frame, this is still a neutral chart pattern, which means we can still be seeing a nice breakout to the downside or to the upside if we do see an eventual breakout out of this 2-year deadlock, right? Now, the reason why I am looking at this one again is that, well, SWKS recently had a nice dive, I believe, due to earnings. And during this dive, we retested this macro ascending support trend line, and we decided to hold it for the 3rd time. And so now we officially have 3 retests of this ascending support trend line, which officially confirms that yes, this ascending support trend line is significant, and so far it exists. And so that also confirms the other side, which is the descending resistance trend line, and it also gives us an opportunity to understand that the price is most likely going to retest this descending resistance trend line, just like it has with the ascending support trend line. And so most likely in the near-term future, we can also get 3 retests on this descending resistance trend line, wherever it may be, right? Since we also had 3 retests on the ascending support trend line. Okay, we want to see some parallel retests occurring, especially when we're dealing with a nice wedge chart pattern. Again, it's an inherently neutral chart pattern. Okay, and so from the longer term perspective on this weekly time frame, it looks like this one is trying to break to the upside just based on how it has held at this ascending support trend line and how it has reacted last week, okay, or last week, excuse me. And last week, a very short week, was just a simple digestion of that massive move up that we saw 2 weeks ago. And again, don't forget that SWKS has been a huge laggard just in its own semiconductor group and just from the broader perspective when you're comparing it to, let's say, the S&P 500. And so with such a huge laggard, I guess perspective from this SWKS ticker, there is a really good chance that we can be seeing a lot of profit taking from the leaders, especially the semi-leaders, and we can see it pouring back into names like SWKS and trying to, at least continue to see some momentum in a small group like the Semiconductor group, right? And there are other names that I was looking at for lagging semiconductor names like AMBA, which you guys can take a look at for yourselves. And there are a lot of lagging semiconductor names that can potentially run up to the upside for the last half of this year, especially, again, if the kind of tone for the rest of this year is to see money flowing from leaders to laggards, hence our position in small caps. Since again, small and mid caps have been lagging for a long time, right? And so SWKS can also be a huge beneficiary if we do see kind of that market shift towards laggards, where we start to see a bit more focus of the laggards. So SWKS on the weekly time frame, we're just looking for that third retest of this descending resistance trend line. And so with that being said, if you go back on the daily time frame, okay, we have what we call a very nice bullish Momo flag, or bullish momentum flag. And what I like about this flag is that, well, it's very tiny because the consolidation had just began. Again, last week was a short week that consisted of only 4 trading days. And during that 4 trading days and days worth of price action, we've just been moving sideways, making a very nice bull flag with a nice ascending support trend line. And this one can potentially break out once the daily 10 SMA catches up. Now, very recently, SWKS has found itself in some very nice and new upgrades from analysts, from Wall Street analysts. And on top of that, we also have an insider purchase. The CEO himself has bought 1 million shares to add on to his existing position on SWKS, or ownership of this company. And so back in May, I believe, is when that purchase occurred. And so with the backing of the CEO and with a new slurry of upgrades from Wall Street analysts, it seems pretty nice to potentially play a continuation, or at least a breakout of this bullish Momo flag. Again, a bullish momentum bull flag. And so we have a very clear entry point for this week on this name, 107.55. I want to see a clear break over that whole number level of 107.50, hence our specific entry point of 107.55. Okay, the cents matter. And so, again, I truly believe that we will be seeing an actual breakout once we start to see a retest of the daily 10 SMA, because again, the price has gotten a bit too far away from the daily 10 and the daily 21 SMAs. So I really wouldn't be surprised if this bullish Momo flag fails. And what I mean by fail is that we just continue to tightly move sideways underneath 107.50, this whole number level of resistance, right, of 107.50. And so as long as we continue to tightly move under this 107.50, then we can allow the daily 10 and the daily 21 SMAs to catch up. And if you guys are wondering the difference right now, or the kind of the distance that the price has from both of my daily 10 and daily 21 SMAs, okay, so from last Friday's close, okay, we are about 4% away from the daily 10 SMA, and we are about 9% away from the daily 21 SMAs. Okay, and so these are pretty large differences and kind of a large distance, since the daily 10 and daily 21 SMAs tend to be very close to the price action or the actual candlesticks. So it would be again, not surprising if we just decide to move sideways underneath this resistance level of 107.50. Alright, but ideally, again, if you want to be optimistic, this bullish Momo flag decides to break out over 107.50 and we get a nice move to the upside, and eventually we hit all of our ideal targets for this week, and especially a third retest of this descending resistance trend line on the weekly time frame. All right. So that is it for this TA video. If this video was insightful, make sure you guys leave a like down below. And if you aren't subscribed yet, I don't know why you wouldn't be, make sure you guys hit that subscribe button. But on top of that, once you hit the subscribe button, make sure you guys smash that notification bell so that you guys know when I have uploaded a new video on this channel or when I am live on this channel, especially on Tuesdays and Thursdays of every single trading week. Good luck, and I'll see you all tomorrow morning.